Hey guys, you've joined us live on Moneycontrol. Pardon me, I'm Manisha Gupta, and joining me live with us in our Mumbai studios is Peter McQuire from XM Australia. Peter, what a pleasure to have you in our studios today.
Well, it's lovely to be here, Manisha.
Has Mumbai changed at all in the last 4 years?
I think it has. You know, it seems to be more construction, and I can't believe, the extension of the seawall or the sea drive, amount of cranes, and it just seems to be busier.
Oh yes. You wouldn't think a slowdown is here anywhere closer, right?
No, I can't see any slowdown here. I think it's pedal to the metal.
Oh, it absolutely is that. But I want to start with what's happening in the international markets. And while, of course, we'll come down to fundamentals of each commodity, but it is the macros, isn't it, which actually took all of us with the wind and the kind of moves that we've seen. Looking at the first quarter of this year, we've seen all-time highs in case of gold prices in India, in Australia as well, with US dollar index coming off its highs. Inflation still a concern. Interest rate hikes, while we've seen Bank of England and ECB do that, but Australia and India haven't. How are you reading the macros from where we stand?
Well, I think I just want to see over the next probably quarter, or how this quarter plays out. Earnings, I want to see inflation story, and certainly rhetoric from the Fed. Australia had I think it was 10 straight interest rate rises, so they put the pause button there, but I'm not sure for actually how long. I think it was just to satisfy the market, for it to acknowledge that. As far as the States is concerned, I saw that big move in January to the upside for equities after Christmas, so it's been onward and upward, and now it's just that holding pattern. I want to see how earnings are.
How are you also looking at the dollar index itself? I mean, are you looking at further gains onto this one, or do you think this run-up is done?
I think in the short term, I want to see again how ECB play with rates, what happens as far as Bank of England, and now we've got someone new in Japan. I want to get a real picture, because I don't honestly think that we're over as far as rate rises for the Fed, and we've got to see what happens in May. It's 50-50 whether we see 25 basis points, but the real sleeper is inflation, and that's going to cause concern, I think, to the US dollar index. It'll probably come off a little bit further from here.
So I've been reading reports which suggest that the dollar index could go to 95, while the others think 108 is a possibility again.
That just shows you trading, isn't it? It's a toss a coin, and which side are you on? It's a 50-50. So I really think I wouldn't be surprised to hit both. Okay. But the trouble is that a 95 might be a bit low and 108 might be a bit high, but I think there's certainly downdraft to be sub 100, so I wouldn't be surprised for that to happen sometime this quarter.
Okay.
And then the upside from there is what happens if you see geopolitical concerns with certainly China and Taiwan, and that would be a big boost, I think, for dollar. So we've just got to see how all those moving parts play out.
For the rate hikes, what do you think is US Fed is headed to, with May 57 to 60% probability that it would be, it would be put at pat? Are you anticipating a rate hike now in this year?
Yeah, I've got to say, I think that they will. I think that they'll knock it up 25 basis points in May. Then they'll sit on their hands. But the true issue is how much higher does energy prices run from here, and the impact of that, of course, to inflation, and whether Jay Powell and his team have it under control. And that's the only thing we know, is that when we look forward in 6 months' time and then you look back, then you say, that's where it was in May, or that's where it was in June. So we're going to live through this cycle to really get an appreciation.
Clearly. You talked about the crude oil prices, and we've seen a big range last year and a bigger one this year already. So when we start at 85 for Brent and 81 almost for WTI, what is your sense on how is it feeding demand? We've seen Saudi Arabia hike prices for consumers. Is that an indication that the demand is not going anywhere?
No, I think demand's still incredibly strong. 100 million barrels a day might come back a fraction. But again, we've got to see a big pullback for there to be any softness as far as price. There seems to be a lot of deals hit all around the world with the likes of Russia, Saudi, Brazil, certainly China and India, and how that all plays out. And there are many components to that. So I think energy prices up from here, that's worrying for consumers. Great if you're a producer or a stockholder, but I think that there's going to be stronger prices, and that's probably going to fuel inflation.
Well, Peter, for the first time, I think it is the changing map. For all these years, when I was looking at crude oil prices, Russian noodles was just another variety. You weren't looking at the prices. But this year, the world is woken up to where Russian noodles also are trading. And with the kind of imports that we see for India and China, what's your sense on that?
Well, Russia's a powerhouse. We know that as far as not only energy, but certainly for agriculture and base metals. It really is. It's one of a kind. And it can really satisfy not only its own internal demand, but export a lot of those goods all over the world. So I think that the demand picture from the likes of India and China is going to be onward and upward, so that more consumption, and that in turn is going to feed well for the likes of Russia, Saudi, and all those big producers in OPEC. And the issue at hand is, if prices do edge up further from here and demand doesn't wane, and that's what I think will happen, then I think we're in for some volatile trading ranges over this quarter and certainly the next quarter.
Any price moves or any price targets that you're putting out?
You've got to say 95. You're at 85 now. I think it's got the potential to hit up there. Probably, it might be a little bullish to say you're going to get there this quarter, but as it marches on, we've seen some dramatic moves this quarter already. And what we saw yesterday week, as far as Sunday, and I was in Dubai, and I didn't think to see any movement from OPEC+. It surprised everyone. It really knocked the ball out of the park. So let's see where we are in the next couple of weeks. I think April is going to be full of surprises.
All right. And with the kind of reports that are being put out by the likes of Goldman Sachs to Citi to Bank of America, 90, 95, 100, even Refinitiv came out with a report like that. Are you looking at a 3-digit coming back?
You know, the big issue is that all these all these investment banks are looking at those sort of numbers, and they're doing their research and big analysis teams. So I'm erring on their side of the camp, because it's pretty hard to put an argument up against it. And I think everyone's bullish. All retail traders, the greater majority are bullish, not bearish on energy. Right. So at the moment, I think, Manisha, it's stronger for longer. And
it's a world, it's a way the two worlds are behaving. One, you have the crude oil, which is rising up, and the gas prices continue to decline.
Crunched.
Everything that you see in terms of fundamentals, whether it's about demand, the supplies, the inventories, we are in the bearish side. Even with $2 is where we've reached. You know, many countries, including India, now have a different pricing mechanism. Starting from 8th of April is how we've seen. We've kind of slightly divorced from what's happening in the international markets. There's a price support and a price cap now. Having said that, what is your sense on the global gas demand?
I think it'll pick up, and naturally it'll be stronger over this northern hemisphere summer, and demand naturally for the likes of air conditioning, cooling, all of that as the summer comes on in the United States, and the overall picture there, and strong demand again over this northern hemisphere summer period. Now the second part of it is, I think it was oversold. I don't think it was crunched down from $10. It was shorted all the way down. Traders rubbed their hands with glee. It was just like short it, and they've just done so well, and now I think it'll probably bounce. I don't know when, but I won't be surprised to see an uptick from here.
Any range that you're putting out for gas?
I think it's that. Let's get to $2.50 to $3, and then we'll see how it goes. But I think it could be choppy, and it could be those big moves, intraday moves and intra-week moves. So I think there's probably a push to the upside.
So Peter, you look at a whole host of commodities. Just staying with crude, and the kind of commodities that it tends to impact is rubber, and then you have sugar, and then you have many chemicals, etc. Anything that you like within this space?
I look at ag, and I'm conscious as far as the building material stuff and the rubber and so many other components that are unique to Asia, or as far as the consumption side. So I'm looking at base metals. Nothing's really knocked the ball or hit me between the eyes yet to really go, wow, I've got to have a look at this. There's some markets that have been more dynamic than others, but I'm keeping my eye very closely on crude, because that's where you've had big opportunity over the last year or year and a half, big whipsawing of price. And it's pretty hard and gold of course, to make that money in other markets when you're coming to trading. Keep an eye on gold.
We'll do that. Also, when you look at crude oil, coming back to that, underinvestments is one story there.
This is the
and
issue.
Then on the other side, the EV demand and the EV investments seem to be growing. How are you looking at the fossil fuels demand peaking up? What is your sense on the investments?
We've had underinvestment, and if we get it wrong...
For some time now.
It's been many years, if not a decade, and that was underinvestment also in mining for the likes of base metals. So how that all comes to play, and silver's going to be a standout in that from underinvestment from a mining standpoint. So you've just got to be... That's where you can really see big components of movements, and I'm not going to be surprised what I see this year, because I think that it's going to be full of surprises, and certainly into next year. So the next 18 months, strap yourself in. It's going to be one bumpy ride.
All right, thank you for not helping at all there. But I'll wind down this conversation with one final question. So what is it, that big thing that you will watch out for 2023, an opportunity or even a challenge for that matter?
I'm going to keep an eye on gold. I think there's probably more upside.
Opportunity.
Yep, and silver. And I want to see where earnings season runs as far as the states, and whether we see a pullback, and maybe, I'm keeping an eye on that. I think currencies are going to be whipsawing, and it's very much a week by week. It's too hard to go out months in advance and go, this is where it's going to be, because there's too many global themes that are coming together all at once.
Absolutely, and yes, as you have previously said, it's a trader's market, not an investor's at all.
Oh, you could be long today and short tomorrow.
Oh yes, and people have been doing that. We've seen people come and change their statements as often as that.
Unbelievable, 24 hours a day, it doesn't sleep.
It doesn't, yes. Peter, pleasure having you in person in Mumbai in our studios here. Thank you so much for joining us.
Thank you, Manisha.